Welcome to Inspiring China, a channel that brings you insights of technology, business, and lifestyle. Don't forget to click the subscribe and notification icon. Share if you like it. Your support is my motivation. In the early episode of Part 1, AI history and China's current state has been briefly covered. For Part 2, let's dig deeper into China's AI market today. It may sound prehistoric when credit cards, ATMs, and POS emerged in the last century, which was not so long ago. For most of us, the real business impact came when the internet appeared in the early 1990s and made quite an entry to the financial sector with the launch of internet banking followed by mobile banking. Post-GFC, the birth of P2P, big data development, and artificial intelligence spring triggered the fintech market transformation. AI was quickly embraced by both financial and technology industry. Most of the AI-related technology has been around for the last few decades, but it is the rise of computer power, substantial decrease of IT cost, and the enormous dataset available are the catalyst for fintech to take off. Along with cloud computing that has revolutionized through democratization of computing, open source community for deep learning, all of this generated the perfect storm for the new AI era. So, what does AI do to help the financial industry? Deep learning as a branch of machine learning can apply to all kinds of financial data using artificial neural networks to spot discrepancies in the information. Such technique has been deployed for prediction, risk assessment, and early warning in the stock market. Natural language processing, or NLP techniques and algorithms help to translate text data into meaningful insight. NLP is widely used in financial analysis, sentiment analysis, and question answering through chatbots. Knowledge graph is a means to connect and represent knowledge in an area of interest using a graph-like structure. It can handle both structured and unstructured data to connect the dots. The technique can apply to anti-fraud, marketing, and investment research. Computer vision, or CV, aims to help computers understand the content of digital images like photographs and videos. Facial recognition used for mobile payment is a good example. Many scenarios in the financial industry are now leveraging AI to automate, identify, predict, and invest. Auto-generation of investment research report, discovery of potential customers, optimization of client claim process that is done online in real time, credit assessment that prevents frauds and bad customer identifications, asset allocation through robots, customer interaction with chatbots 24/7, and biometric payment that creates superior user experience. 3 common fintech commercial models are used within the financial industry. Incumbent banks and financial conglomerate set up its own fintech arm has gained momentum for the past 7 to 8 years. These fintech subsidiaries can provide services to both the parent firm and external clients. Collaboration is another way for incumbents partnering with tech firms through the setup of a joint venture. The third type is the most common arrangement where fintech firms provide services to banks or other fintechs. There are more than 1,000 AI companies in China, accounting for 21% of the world's total, as runners-up to the US, which has doubled the numbers of China. The AI applications market revenue is estimated to be $23 billion by 2023. The AI ecosystem for financial industry is mind-blowing. Fintech arms of incumbents, tech giants, and AI companies are all competing in the financial industry. Although China is still depending on some of the key technology from overseas, specifically semiconductors, tools, and talents. This is already reflected in the 5th plenum of the 19th Central Committee last year, reiterating China's self-reliance in science and technology as part of government's economic and political goals, thanks to the recent geopolitical tension. Some of the financial players have started deploying AI technology in their services around 10 years ago, but the ones that make a splash are the Chinese tech giants. Inaugurated in December 2014, WeBank's first microloan was disbursed to a truck driver. JD Finance also launched their microloan product in 2014, where AI played a key role. The labor-intensive and time-consuming risk management processes within banks in areas of pre-loan, loan, and post-loan along with the unsatisfactory user experience and inconsistent quality is where AI technology excels its best, automates, and self-optimize without human intervention. OneConnect, a fintech subsidiary of Ping An Group, the Chinese financial giant, is founded in 2015. OneConnect provides technology products and services for the financial industry with its solutions in retail finance, corporate finance, investment, insurance, and its technology as a service Gamma platform. The fintech firm has 3,600 staff, including 200 data scientists. Total patents filed already reaches 3,300. The accuracy of OneConnect facial recognition technology is 99.8%, and VPR accuracy is 99%. Much of the AI technology is world-class due to the talent pool and financial backing of the parent group Ping An, which is a technology powerhouse with 21,383 patents filed and 35,000 R&D staff. The fintech applies image recognition, voice print recognition, and other technologies to customer and applicant authentication in the process of remote account opening, which reduces labor-intensive work. Micro-expression recognition based on image technology has been widely deployed in loan processes, which support more than 50 kinds of complex expressions within a second, which will effectively reduce fraud risk. China Industry Bank, or CIB, a Chinese commercial bank, ranked 24 globally by Brand Finance in 2019. CIB branch automation has combined online and offline channels that provides lobby service, self-service, teleoperation, back-office function, and remote support. With 6,339 ATMs and 4,882 intelligent teller machines that's been optimized with paperless operation, and the support of more than 10 RPA automation that transformed CIB physical branches. Last year, CIB has launched an anti-fraud platform for the credit card center, which is jointly developed with 4Paradigm, a local fintech that specializes in advanced AI and machine learning for the cross-industry, including finance. Based on 4Paradigm's Profit platform, the combination of machine learning models of artificial intelligence platform and risk control rule engine, the processing time of a single transaction in credit card center of industry bank takes only 20 milliseconds, with 99.9% of the transactions completed within 50 milliseconds. The self-learning system can also automatically optimize the model. The result has dramatically enhanced the precision of risk detection and operation productivity. 𝗘𝗣18, one of the leading fintech, has developed their proprietary solutions for financial institutions that provides analytics as a service to partners and clients. The service combines first-hand data and third-party data and applies AI technology over the loan life cycle and identify possible frauds and illegal activities. The fraud detection techniques used include data, biometric, IP address, and online behavior. Other analyzing services cover text, images, and voice that combines with machine learning and AI algorithm to identify gang fraud, poor credit history, and liability. The system also tracks overdue records, new loans, and legal disputes, and predict potential risk. Money laundering is detected through 𝗘𝗣's knowledge graph application architecture and distributed big data platform. The discovery is conducted via IP address, devices, transaction channels that analyze client relationship with funding path, mining of suspicious transactions, group money laundering chain, and identify complex and hidden cases. The AI investment trend continues with large commitment from the government, venture capital, and financial institutions. Latest law on data privacy and security have also clarified data usage and jurisdiction in the industry. However, the challenges should not be undermined. U.S. technology export restrictions, including leading-edge AI chips, made China vulnerable to supply disruptions. Talent disparity, especially in the fields of data science and AI, is a global problem. According to recent market research, China has around 39,000 AI researchers, which is half of the US. In terms of AI experience, US also has an edge over China. On the brighter side, China is pouring in enormous resources into the AI industry and education to expedite and closing the technology gaps with the US. It is only a matter of time before China becomes self-reliant. The year-on-year increase of Chinese graduates, engineers, and scientists returning to China is encouraging. Also, China has become the number 2 labor market in the world, attracting foreign professionals, as reported in a 2017 HSBC research paper. So, will China succeed? Only time can tell. Thanks for watching. Don't forget to leave your comments and see you in the next episode.